Welcome back, guys. Now in my blank studio. As you can see, there is progress with the remodeling of my studio, but that's not why you are tuning in. You are tuning in because Ethereum might come in and save the Bitcoin price in the, let's say, short to mid-term. And I'm gonna show you what I mean by that in today's video. And of course, we are also gonna talk about the Bitcoin price besides Ethereum. And if you think that's interesting, then definitely stick around here. Make sure that you're subscribed to the channel, like this video, and also activate the bell so that you will never miss out on these important updates. And of course, I just want to mention, because I had this work going on yesterday, I could not make a video because they were here until late. So, but now let's get directly into it. So maybe you guys have seen that a couple of companies are filing right now for Ethereum spot ETFs. And why is that such a big deal? It is a really big deal because these spot ETFs for Ethereum might be approved before the actual Bitcoin spot ETFs. There is right now quite a high chance that they get first approved before a Bitcoin ETF. So, and when we're looking at the dates, so first of all, you can see here the first filing from ARK21 shares, Ethereum ETF. They had filed for this, actually I cannot see the date here, but they had filed in August for that, as far as I can remember. So in August they filed for that, and the first deadline is coming up, I think in October or November, but let us look together. Deadline, maybe here on Cointelegraph, we can see it. So here, okay, it's not written here, so, but there is a high likelihood that this will be approved before a Bitcoin spot ETF. So, and why is that? Because the SEC has already a lot of problems with Grayscale right now, because they said the decision against Grayscale was not justified to deny the Bitcoin, the conversion of their trust that they have, the GBTC trust, into a spot ETF. So the decision was reversed, which did not guarantee that they will be now approved for an ETF, but that the SEC has to reconsider to approve them for an ETF. So that was what was going on there. And that might have opened now a really big can of worms for the SEC, where they actually are backed into a corner and have to make a decision to actually approve something ETF-wise in the crypto space. So, and for them, the lesser evil would be to approve Ethereum spot ETF than a Bitcoin ETF. So, and that's most likely what's going to happen here in the near future. So, and now it was, of course, not only here ARK21 shares, it was also, what was the other one? Slipped my mind now, the name. ARK Invest. And there was another company that also filed for. So yeah, ARK Invest, VanEck. VanEck was the other company. I knew it's something with V. So yeah, VanEck was the other company that's filing for Ethereum spot ETF. So now, the other question is, why did they choose specifically Ethereum for filing a spot ETF and not something like XRP, which has already institutional backing, or EOS, Solana, Elrond, whatever? They could have chosen more or less any top 10 coin to do that. So with Binance, it would have potentially be a problem, but with BNB. But there is still a lot of other coins where they technically could have filed for a spot ETF. So I believe that they have chosen specifically Ethereum, not only because it's second after Bitcoin, also because it's deflationary, since they have introduced the stake of proof mechanism for Ethereum. So, and now that Ethereum has not an infinite supply anymore and is limited, we have to look at the circulating supply. So, in the circulating supply and the total supply, so which is the same, of course, for Ethereum, is 120 million Ethereum. So now, where can we see that this will have an impact when it comes to supply shock? So for this, we go to Glassnode, and here we see the burned supply in Ethereum. And here you see the total burned supply for now for Ethereum. And until now are 4.2 million Ethereum burned. Percentage-wise, that's roughly 3.5% of the total supply of Ethereum. So this will only increase over time, and that will make Ethereum also more valuable over time. The same with Bitcoin, with the increasing hash rate and the difficulty adjustment every 4 years with the halving, where the miners get less coins, so the price has to go up so that they are still sustainable making profit while mining Bitcoin. So, and that is basically the same thing here with the burn supply on Ethereum. So the price has to go up because there are less coins available, and that will automatically push up the price. That's just logic, right? So, and at some point, this will have an immediate impact where we're going to see a massive spike in the price to the upside. So, and I think that is the other reason why they had chosen Ethereum to file for a spot ETF. And of course, a lot of institutional investors are already in Ethereum. So now when we look at the Ethereum price, right now it looks quite boring. Everybody knows that. It's really, really boring when it comes to Ethereum right now. So what I'm looking at is at the swing high and at the swing low, because one of both, either one will be hit quite soon here. We are right now closer to the swing low, so it would make sense that the bears are trying to take out the swing low and push for a lower low. It would make sense. So, but not always what makes sense is what's going to happen. We have learned that many, many times. It's also possible that we first take out the swing high and push a little bit higher, and then potentially come one more time down. But for now, I gonna admit it looks like that we first gonna take out the swing low before we go higher. So now, how would I trade this when I look at this? So, and also I want to show you something else. Here's also this nasty downwards trend line that has to be broken before we can go higher. And I believe we might come up to retest it for a potential break at $1,700, going to fail and go lower. So, but once we go lower than at swing low at 1,550, I believe that around 1,400, 1,450, that we gonna create a range here. And from there we will then see a massive, massive push back to the upside in the $2,000 area for Ethereum. Also, when we're looking here with the Fibonacci extension tool, one immediate target that we can potentially trade would be the Fibonacci golden ratio, the 0.65, 0.618 here at 1,861, 1,846, so roughly 1,850. But I would not enter along until we would have broken that level here. I would wait for a break of $1,160. I would not enter before. So that would be the level that I would be watching for a long entry. Or another long entry. So where you can try to long it would be actually at the swing low with a really, really tight stop loss. So when is this for longs? Yes. So when you look at this, so here would be my stop loss, like at 1,600. If I would enter this trade, and then here to the upside, let's say 1,850 as immediate target. So there you see risk to reward ratio is almost 1 to 3.5 almost. So there's a really good trade here, 11% to the upside. You put 20x on that, you make over 200% to the downside, 70% for the stop loss. I would do this with a small position, guys. I would not put massive, massive amounts on that because there's still a lot of uncertainty in the market, and I would not risk here a big bag of money on that trade. So I would use a small amount, something like, personally, I would use maybe like $2,000, something like this, which is like 0.0 something of my portfolio, and not much more. Just to make sure if it turns against me that I'm not losing too much money portfolio-wise. So, and if we break the swing low and we start to go lower, we also should look at that. if we break it, so I would have a tight stop loss and take this then to like 1,400. So there you see risk to reward is actually better. It's 1 to 4. So, but here comes something that you have to be aware of. The chances that we are going higher are not as limited as the chances to go lower. So let me put this in other words. The downside is limited. The upside is not as much as limited. And that's why I would rather bet on a long than trying to catch potentially here a falling knife to the downside, where we potentially see something like this here, but it comes straight back up. So, and if you are not catching it exactly here, and by accident you only catch it here, and then it comes straight back up, like in a 5-minute candle, then you actually lose money. And that's why I would be really, really careful with a short here to the downside. I would rather try to long this once we are breaking $1,660 to the upside. And guys, don't forget, if you want to long or short Ethereum and Bitcoin, do this on BYBIT. You still get $30,000 if you use here my specific link in the pinned comment below and in the description. Only with that link here, with this one, you will be able to claim that deposit bonus. So now let's also talk about a Bitcoin. Here on the 4-hourly Bitcoin chart, here are still a lot of imbalances that have to be cleaned out on the chart. So I'm gonna explain you once again what an imbalance actually is. So an imbalance is an offset on the chart price-wise, where the price has to come back to settle it. So you have to see this like a scale, you know. So when you have a scale, you have on one side a weight, and you have one on the other side. So now they are balanced out, because let's say the price is not really pushing or breaking down. So you have it balanced out. So but once the price makes a movement to the upside, an impulse move is what it's called, an impulse move. It creates here a gap, because here this side has not yet caught up to it on the chart. So, and that's basically what an imbalance is. So you have to have the other side catching up to the impulse move that has happened before. So, and here with this indicator, you can actually see them. So another name for them is fair value gap. So, but it's technically an imbalance. So you can see here, there is an imminent imbalance going all the way up to $26,200. So at some point, the price has to come back up here to fill this imbalance. So how would I trade this? I would wait until the price comes back to the bottom of the range here at $25,500, long it from here, and trade it all the way up to $26,200 and take there my profit. That's how you trade these fair value gaps. So you can trade them to the dollar, and then you have to get out, because most of the time what happens is when a fair value gap gets closed, the price is immediately turning around again. So that it's not a good idea to keep on holding along when you are trading a fair value gap. So that is something that I definitely want to point out here. And you should set your take profit beforehand. So you should not kind of go with the flow and not set your take profit and do it manually. For a fair value gap trade, for an imbalance trade, you have to do it beforehand. Otherwise, you might miss it. So you see here also a lot of other imbalances on the way up. So here's the second one, third one. My drawing skills are impeccable, as you can see. A fourth one, and here even a fifth one. So you see here all the way up to $27,500 are 5 fair value gaps. So another possible scenario what could happen, which I don't believe is going to happen, but technically it can. We know a lot of things can happen with Bitcoin. Is that we come down here, we break a little bit lower, and we clean all of them at once. But then we get a really ugly candle straight back into that range. So that is also something that is definitely possible. But like I said, I would try to trade these fair value gaps one at a time and not trying now when you see here this move happening, when we come down to the range, that you think like, okay, I set my take profit at $27,500 because I believe that there will be a crazy move immediately pushing all the way up there. So that's something that I don't believe is going to happen. And I'm going to show you in a second some other reasons why I don't believe that it will be the case. When we're moving on here to this 4-hourly chart, we see that the bullish divergence is about to be invalidated. And that is something really interesting to watch here right now, because in the next hour, we're going to know if it's invalidated or not, because the RSI has broken this upward sloping trend line. And the break of the trend line is an indication that the bullish divergence might be invalidated. So what normally follows is that also this downward sloping support will be broken. And then we have to look here again at $24,700, $25,000 as a potential bounce level. It might be quite likely that we will see a move into this area then potentially even over the weekend, because it's easy to move the price over the weekend, as you definitely already know. So, and then also here, when we are looking here on the 1-hourly chart, I'm using here an AI oscillator indicator that tries to predict future moves in the momentum. So, and what it tells me right now, so first of all, I try to explain it to you guys how it works. So when you have here a flatlining area and the flatlining area is to the downside, it normally means that the price action will reverse back to the upside. So, and when you have then a flatlining area at the top, that means normally that the price action will reverse to the downside, even though it went up here and the price actually went sideways. So, but this is normally how it works. So now the price action twice created here a zone now where it flatlined at the bottom. And now the question is, will we see a reversal first to the upside, or will this here start again flatlining and we get pushed sideways or sideways down? So from what I see here right now, it looks like that we're gonna get pushed sideways down, like I said, into the $25,500, $25,000, $24,700 area. That's most likely what's going to happen here over this weekend. Also here on the daily chart, still clear daily levels that we have to watch. I still want to point out, if we lose the $24,700 area with the 25K one, the next one will be $23,400, $23,000 approximately. These are the next levels to watch. I still believe that there is a chance that we get shaken out into that area here. And like I said the last time, that is an area where I gonna try to long with as much money as possible into Bitcoin, to trade us then into the 30K, 40, even 50K area this year. So I will use a really, really small amount of leverage, something like 10x or something, just to make sure that I will not be shaken out. And I will have money on the sideline, just in case that we come also all the way down here to like $20,000, just to make sure that if we come down here, that I have money on the side to average down my long position to trade us then into the yearly and to the upside. Here on the 12-hourly chart, we don't need to talk about this. And then here on the heat map, here is the other reason why I believe that we are first going lower before we go higher. So you can clearly see here the yellow clusters that are here. They are sitting just... So when we're looking at the price, where the price is now, so you see here a lot of yellow clusters. Can I not make a line here? So that you can, yes, I can. Sorry guys, I have to remind you guys that this software is still quite new to me. I can change the color, good. Let's make it red. Everything above that red line is resistance right now, where people want to sell Bitcoin. And you see here under the red line, there is a small level of support at $25,000 roughly right now. But if we lose these orders where people want to buy, it will drop potentially to 24 and then all the way down to, yeah, the next bigger cluster would be at $23,200. So these orders don't mean anything until they get filled. I want to remind you that this is just a help to get an idea where the price might be moving, because these orders can be canceled, they can just be spoof orders. That's why we have to be quite careful with them. But with everything else in Confluence, when we're looking at the charts, it makes sense that these are the levels that we have to watch next when it comes to Bitcoin and Ethereum. So now, of course, if a Ethereum ETF gets next month approved, that will be a massive catalyst for the Ethereum price that will also have an effect on Bitcoin, because market makers will not let Ethereum run to like $3,000 and Bitcoin will not catch up at the same time. That never happened before, that you see something like this. Maybe it takes a day or two, but Bitcoin will eventually catch up to that. Guys, that's it for today's episode. I hope you enjoyed it. Please make sure that you check out my Signals channel. We are killing it, even though while Bitcoin is going sideways. We had a trade, I think, just yesterday with over 200% profit. Check it out and make sure that you smash up the like button, hit the subscribe button, hit the notification bell, and I see you then again tomorrow.